I've been trying to understand the risk management side of your formula and would appreciate your input to confirm your calculations are correct. Here's a summary of my math. Account value and risk capital. Account value 100 G's, risk capital 5% is 5,000. Absolutely, you nailed that. No doubt about it. Good afternoon, traders. Oh my goodness, it has been a day. Got on my computer this morning, dead, completely dead, all the way dead. And I'm like, okay. We had lost power at one point over the weekend. I don't know why. But we lost power at one point over the weekend. And I'm looking around and I'm like, okay, maybe it's okay. Maybe hopefully it's okay. And I keep pressing buttons. Google it up real quick. And it's like, unplug this thing, turn the switch, try again in 5 minutes. I tried, still nothing. And so I diagnosed it pretty quickly that it was my power supply on my PC, which I didn't build this PC, but it is a gaming PC, you know, one of those like with the graphic cards and whatnot. And I was like, oh, okay, so this is a modular thing that has died. So let me order a new one. So I went on Amazon, had it, you know, same day delivery, and lo and behold, felt like a mechanic pulling this out and be like, well, there's your problem. So yeah, this thing is dead. My children are going to love tearing this apart. So yeah, that was the whole thing. And I got it ready legitimately within the last 10 minutes. So I'm super stoked that I got it up and running. I tell you, I have not at all taken a look at anything except on my phone. I saw that the market was bouncing really hard today. But I was just right now, in fact, since I'm doing it, let's do it together. I was just right now updating my spreadsheet for the market breadth of the different sectors. And I had just gotten to communications, so I'm wrapped up on that. I still haven't figured out a way to make this work as a Google Sheet, because I'd love to share this with you as a Google Sheet. But I haven't actually pulled my data yet, so we'll be doing that in just a minute. Tug is here. Randy's here. Yorn, hey, good to see you, Yorn. Wes, I gotta say, that was a super awesome Discord message you wrote. In fact, let me throw a couple emojis onto that too. I'm really glad I can help you out with that, my friend. This is my passion, my dude. We went to dinner with one of my friends in real life, and I consider you guys my friends, but one of my friends in real life, he works at Toyota, and he made the mistake of asking me about options, and I was like, oh no, you done messed up. And I just started laying into him, and I could see him like, oh geez, oh no, this is too much for me. So yeah, I'm really glad that I can help with that, and make that make this useful for you, Wes. This is absolutely my thing, so I'm glad to help out. No stress. Flexible planning. Yeah, flexible planning. I'm just glad that Amazon could same day deliver it to me. It helps to live, you know, in a area where they can get to you on the same day. That makes all the difference for sure. Hey, Jean-Louis, good to see you. Okay, so let's man, I tell you what, I was actually excited. I was thinking about the market all weekend. I don't know if you guys were. I was thinking about all these results that we've had lately, all the returns that we've proven over the last 2 years, long and short, and I am just like, let's freaking go. Let's find some short trades and let's get busy. Brian, good to see you. But before we can get busy, I owe you an apology because I forgot to do this on Friday. So we're going to make it up today. It is our weekly winner's circle. That's right. So the way you can enter the weekly winner's circle is come over here to share your big wins, and then just let us know how you have used OVTLYR. And in fact, several people had added things in different areas. So I went ahead and I moved this over here for you to be counted towards this. So I've got quite a few people to include in this week's weekly winner circle. Give me a second. Okay. So Brian was our last winner 2 weeks ago. So we've got Dave. So let's type this in. Dave is going to be number 1. Then Jean-Louis. And then Leo. That's the other one. LEO. And then Tug. And Sebastian. And then Tug again. KMB. I'm not sure who KMB is, so I'll just type in KMB. 35. JW. And Mahesh doesn't count. Trying to sneak in there like I wouldn't notice. And that's it. Okay, so we have quite a few. Awesome. So the way this is going to work is I am going to assign each of you a number. Then I'm going to go on the random number generator, and it is going to tell me a random number between 1 and 7. Whatever number it lands on is our winner, because I am not going to pick this winner. Cam, is this you? KMB 35? Dave, good to see you. All right, glad y'all are here. All right, let's go to the random number generator. What the, Michael? What are you doing here? I thought you had to break some necks and cash some checks. Okay, so we're going to go from 1 to 7. Now, after I hit this generate button, whatever number pops up, that's going to be our winner. No, it's not. It's not Cam. Sorry, dude. I tried. And 3, and 2, and 1. Result number 7. Who's number 7? JW. I don't know who JW is, but congratulations. I'm going to jump in the Discord and let them know, he or she or they, I guess if you want to think of it that way, that person know that they're the winner. Congratulations goes to JW for winning this week's winners circle. And I apologize for not having done that last week. Completely 100% my fault. Mark texted me and he's like, what the hell, Chris? Thought you were supposed to be picking winners on Fridays. And I was like, I'm sorry, I forgot. It's my bad. So yeah, we're gonna tag April to make sure she does that. And way to go. Way to go, JW. All right. Good old JW. Sounds like a Texas name. Speaking of, had to put this shirt on. Like I say, I wasn't planning on actually being live. I didn't think I'd have the computer ready. But at one point in my life, I actually plan on getting this tattooed on my body. So I'm very excited about that. Us Texans are a little bit different. All right. So let's go over here to the screen. I'll tell you what. Let's just make this market analysis at this point. We're good to go. Come on, come on, come on. There we go. Welcome to the Outlier Trading Room. This is smart trading made simple. Save. Oh, wait a minute. That's a slide I need to delete. There we go. Save time, make money, start winning with less risk. That's what I like to call profit hacking. And we're going to be covering what's in the playbook. And if you don't have a copy, you can go over to profithackingplaybook.com and grab yourself a copy, or inside our Discord in the VIP Investors Toolkit. And for those of you who don't know me, my name is Christopher Yule. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I'm a partner with OVTLYR, and this is my style of trading using OVTLYR that I call the golden ticket trading strategy. It's the 8 steps to turn profit hacking into pure gold. Be sure you subscribe. I'd hate for you to miss out. So it always starts with the master key. The master key has given me 80+% win rates over the last 2 years, which is unbelievable. And I am so stoked because we're lit up. We got a sell signal on the SPY. Market breadth is very weak, and sector breadth is also weak. In fact, let's pull this up here. All of my sectors, with the exception of staples, are all bearish. So that's cool, including the market. I've also dropped in all of the what is it called? The ETFs that go along with these guys as well. So if any of them else pop out, I'll be there. So the market is bearish. The sectors are bearish. Let's go to the next step. Oh, we got a SPY sell signal on the SPY. Hang on, talking too fast. And we got that sell signal last week. And I saw, Wes, on your post, how much analysis that you were doing using the OVTLYR data. And that's awesome, dude. I'm super stoked about that. In fact, the way that you described your analysis was the way, in fact, let's go over to that real quick. here. Yeah. The way that you described your analysis right here was exactly how Mark and Mahesh had initially pitched this to me ages ago, and I didn't get it. Like, it was very difficult for me to grasp. Clearly, a lot has changed since then, but this was even before the buy and sell signals. So yeah, we've come a long, long, long way. So we got a sell signal on the SPY on September 5th. So just what day was that? Last Thursday. All right, so that's sell signal. Market breadth this week, sector breadth this week. We go to the next step. We do have a bearish crossover here. We have the 10 under the 20, price under the 50. That's what we want to see. Now, this rule right here saved our butts, right? This rule right here saved our butts over the last couple of weeks. It was on September 3rd where I said, I'm going to cash, right? This candle right here, because it closed under the 20, and then the market's kind of fallen out at that point. So I have rules for a reason. We already talked about the sector breadth, so we're good there. We don't have any trades on to reduce risk, so we're going to move on. Now, this criteria, Max, this was one of your questions. This criteria is the same, basically, in reverse on the short side. So let's take a look at that. So here, I just named my screener Outlier Bearish. I don't think this is a shareable asset at this point yet, but I'll go through it real quick. Index sector and industry, I leave wide open. Outlier signal return positive only. Capital efficiency, all of them. 30-day average volume greater than 1 million. Current signal status, sell. Price change, I leave that wide open. Oscillator moving down, that's the blue line on the chart. Market cap, I leave wide open. Price range, I like over $20. You can do anything that floats your boat, but I like over $20. Heat map value, all the greens, all the reds up until red 40. No, red 40 is like a dye, isn't it? Yeah, I just remember that. I had a friend when I was a kid who was allergic to red 40. I couldn't imagine being a kid and like 3/4 of the candy out there has some sort of red 40 in it and you can't eat it. That would suck. Anyway, downtrend indicator active. That is the red backgrounds on the charts there. So with that out of the way, we only have, today's the 9th. We have 1, 2, 3 for today. You could go back to the 5th or the 6th. I'm not going to. I'm just going to focus on the today signals. I'm going to drop them here. The only reason I drop them here is to, if there's more that are bullish and bearish, I'm going to filter out just bearish. All right, because this VLOOKUP's the sector over to the list that I already made. So it's still these three: AD&T, APO, and C for Citibank. I think I already put them in over here. I did, yeah. And then just hit refresh. Now this is running through a really quick chart scanner. It's looking for no order blocks in the way. In fact, let me turn on order blocks. I think I turned those off last week. I did. Okay. It's checking for no order blocks in our way. No earnings in the next 3 days. The 10-20-50 is all trending down as well. So let's go to APO as an example. So this is inside an order block already. I won't trade that. And I don't know why the scanner sometimes blows. But a lot of times it works. But every once in a while one slips through. I don't know why that one slipped through. But I won't trade that. All right, Citibank, this looks good. Now it does have some order blocks down here, but that's $5 away. I'll be glad to make $5. Thank you very much. And then AD&T is also inside of an order block. So Citibank is the only one I'm interested in. All right, and then making sure it's not above the prior day's high. I know it says prior low. I could rewrite this slide to be bearish, but that's exactly what it means. All right, so next, let's confirm the heat map is not already stalled on Citibank. So it's just the one. By the way, how was y'all's weekend? Did I do anything fun? Saturday, my younger son plays sports. My older son doesn't. And we were outside from 11 a.m. till 5 p.m. Beautiful day. We decided to tailgate lunch in between his sporting events. And dude, we all got so sunburnt. Oh man, you can probably see it on me. I got a lot of sun. And yeah, it was just a beautiful weekend. I love fall. I love fall so much. The high at this moment is 78 degrees here in Texas. It's crazy. All right, so we got our sell signal right here. Yesterday's heat, oh man. Did already saw it. Yesterday's heat map was G15. Today's heat map is G15. Right. So I won't trade it because the heat map is already stalled. Now, the question you probably are asking is like, well, why not? If the heat map stalls, that's an exit signal for me. Okay. The heat map is a representation of how fearful or greedy people are getting, right? And if this slows down or halts, that is a signal to get out, right? That means that it doesn't have the momentum, right? The behavioral momentum, if you want to think of it that way, behind it. And I'm not going to risk that. And here's a huge rule, okay? Do not ever put on a trade on a day where you have an exit signal. That it blows my mind why anybody would want to do that. But I've done it. I've done it. I've definitely done it. That's how I came up with a lot of these rules. Was I was like, oh, wait a minute. Probably shouldn't do that. I probably should not put on a trade on a day when I would have an exit signal. No, that seems backwards, right? Let's see over here. Cam says it's still 90 degrees in South Florida. Dude, I hate 90 degrees or more or whatever it is. But I won't take a trade in Citigroup today. However, let's go ahead and push through. Randy had a question on, I believe it was Randy, had a question in the Discord about position sizing. So I want to do that. Brian says, do you still use Outlier long scanner or a different one in bearish setup? It's I changed it up here. So this is actually a neat feature in TrendSpider. So I switched it from the long scanner. It shouldn't pull anything over to the short scanner. And in fact, let me pop this up on the screen. I have no reason not to share this with you. So I'm going to copy this. I'm going to drop it in the text here. That's my long scanner. And this is my short scanner. So that's in the chat. Take them if you want them. You don't have to have them. But this is what it's looking for. It's exactly this. But let's go through the short one real quick. Price. So current price less than the 50. Current price greater than $20. The 10 EMA less than the 20 EMA. The current price less than the 10 EMA, which should be anyway. And then the current price less than yesterday's high. Okay. So that's what's going on in the candles. Here, no earnings in the next 3 days, no earnings today. And then this is the order block criteria, which, as we've discussed just a little bit ago, it's not perfect. I don't know why AD&T pulled through or APO pulled through, but I actually reached out. So I have contacts at TrendSpider as well. I pulled out to them directly or reached out to them directly. And I was like, how do I filter out for order blocks? And they coached me through it, and it still wasn't all that great. So just one of those things. It's nice to be aware. Good gravy. David has melted in Phoenix. David, I'm sorry. It was nice knowing you, Dave. Randy says, probably because XLF are up 1.6%. Hey, Randy, isn't it great to have been in cash instead of going short when things are going nuts like this? Cam says, my wife hates Phoenix heat. We're there in June. Well, it's too hot for us Floridians. And thank you for sharing. This is a cool day. No, it's not. What do you live in? Like actual hell? 104 degrees. Okay. Let's move on to Randy's question about position sizing. So June was 118. He does live in actual hell. I've been trying to understand the risk management side of your formula and would appreciate your input to confirm your calculations are correct. Here's the summary of my math. Account value and risk capital. Account value, 100 Gs. Risk capital, 5% is 5,000. Absolutely. You nailed that. No doubt about it. So that's this right here. 100,000 times the risk that you're comfortable with. Now, position sizing and stop loss calculation. ATR value. Okay, so as example, ATR value is 1.5. The full ATR stop distance would be 3. So 2 times 1.5. You nailed it. Absolutely. Wait, hang on. No. I misread that. I was thinking something else. Okay. Full ATR stop loss distance. Me personally, I like half of an ATR as my stop loss point. You can do whatever you want. I got that from the Complete Turtle Trader. That's an amazing book if you haven't picked it up. I know we've talked about it before. Do definitely pick up the Complete Turtle Trader book. So a full ATR stop loss would be 1x the ATR, a full ATR. So it would be 1x 1.5 here. Half ATR stop distance is 0.75. It's just half the ATR. Yes, and that's the one I would go with. I wouldn't go with the full ATR. You can do what you want. That's what I go with. Number of shares calculated based on ATR, which should equal pretty much this, right? So 2 times the ATR value is used to establish the volatility. We talked on Friday just how important it is to position size based on volatility. And I showed an example. In fact, I would recommend going back to Friday's video if you have questions. My camera has moved. I look like I'm like falling out of my chair. Give me a second here. So I have this really cool camera that can move. Yeah, it can move and track me. And I don't always want that. I want it like set. So there we go. All right, back to the story here. So the 2 ATR value is to set the volatility on your position size, not necessarily the full ATR stop distance. True risk calculation with a half ATR stop loss, 25% of the full ATR stop loss distance. Oh, I see what you're saying, because it's 2x the ATR. I get it. I don't think you're far off. I think we got off a little bit on the full ATR calculation here. It is 2 ATR on purpose, right? It actually should give you less than 5% in risk on purpose, right? We're starting there and we're adjusting based on our position size. We're adjusting our position size based on volatility. The more volatile it gets, and so this is what I was trying to say. On Friday, we talked about how on the SPY during COVID, it went from I think it was a 5 ATR. No, it was a 3 ATR right before the COVID meltdown. And it went up to a 15 ATR. So it was 5x. That's what it was. It was 5 times bigger on the average true range, which means your volatility expanded. Okay. When your volatility expands, you want to trade a smaller size. That's why this is in the denominator, because it'll reduce the number of shares you would take in this case by being in the denominator versus not being included at all. In fact, let's do this math. Let's do this math here. So let's say we have 100,000 and we have 5 in risk. Okay, so that's our 5,000 risk that we talked about. And then we're going to say the ATR is 1.5. So we're going to say this divided by 2x this. All right, that's the number of shares. That is the example that I give. Okay. Now, if volatility expands and the ATR goes from 1.5, and let's say it's 5 times higher, equals this times 5, exactly the same situation as the SPY we talked about, you would be so much less. You would take 333 shares versus 1,666, right? A tremendously smaller position size based on the volatility. It's so important to base on volatility. And that's one of those things that pro traders do, right? I don't just pick a number and go for it. There's zero reason to just pick any number and be like, oh, I would love to trade 27 contracts. Why not? The last one I traded was 27 contracts. The example I always give is Coke and Tesla. Okay. And we'll do a live example of those, in fact. So let's say this is Coke and this is Tesla. Let's go get the ATR values for both of these. All right, Tesla's ATR value is currently at 1165 on the bottom right here. This line 1165. Coke, their ATR value is 0.992. So you could say 99 cents. You could have 2,500 shares versus 200 shares and have the same risk. That's a big difference. That is a huge difference, right? But when you do that, you're still basing it on the 5% position size. Okay. And then, so let's work on the math on this, right? And see the actual risk, because it's more than likely going to be less than 5%. So let's say we take it at what's the current price? 71.86. And we take a half ATR off of that. So 0.99, we'll just round to 0.5. So 71.36 is a half ATR. We'll just say 71.35. So if our opening was 71.35, our half ATR, oh, that was half ATR. Current price opening. So that is how much? This minus this. Okay. It's not zero. Shut up, Chris. There you go. All right. So it's 51 cents of risk times the 2,500 shares. It's actually $1,200 of risk versus 5,000. And that's by design. That is by design. Yes, we're saying we want to take 5% of risk. Okay. And you can't always get out at the half ATR, right? There are days where it's gap down and it freaking sucks. But if this is where my risk is starting and this is where my risk is ending, I'm comfortable with this risk, but I would much rather take this risk instead. So let's do the same for Tesla. Like a tornado in Colorado, stay safe, my friend. 1165 is huge, yeah. So this is why it's a great example here. And that's why I always use those two. All right, Tesla is currently trading at 216.92. And if we take 1165 divided by 2, let me subtract that off of 216.92. 211.09. And the opening price was 216.92. Huh. Would you look at that? It's the same amount of risk. Who would have thought? That's why it's so important, okay? Isn't that cool? Right? So you can trade Coke or you can trade Tesla, and either one, if you're able to get out at the half ATR value, basically, like if you took a stop loss at the half ATR, would be nearly identical. Super ultra close. That's why I say you can't just roll in and say, okay, I traded 100 shares on this stock. I trade 100 shares on Coke and 100 shares on Tesla. I have the same amount of risk. I have 100 shares in both. Not even. If you look at it, you actually have 12 times the risk because of the ATR value. It's 12 times bigger, give or take. Randy says, nice. So this is by design. Right? This is not my design. I wish I could take credit for that. This would be from Richard Dennis. Richard Dennis is basically the star of the Complete Turtle Trader book. Let me show you Richard Dennis. Richard Dennis puts me to shame, absolutely to shame. He made, I think it was $180 million by the time he was 28. I mean, good gravy. Yeah. Richard Dennis, one of the market wizards. Is he still around? Yeah, he's still around. Dude has made ludicrous amounts of money. But that was one of the things that he taught his traders, and traders all over the world should still follow, is base your position size on volatility. If you can do that, you can trade vastly different markets. You can trade vastly different stocks that have the same risk. That helpful? Let me know in the chat. Is this helpful? Right. I'm trying to do my very best to give you as many teaching moments as possible. All right. So much better than chasing growth stocks with blindly using 7% stop loss just because the orange book said so. I know that book. I know exactly that book, Wes. Turtle Traders is a great book. Read that last summer. It is an incredible book. Dave says, very helpful. Awesome. All right. Well, I'm not taking a trade today, even though I really wanted to. I honestly was thinking about it all weekend in Citibank, but the heat map's already stalled. So no, thank you. But we'll be back tomorrow. We'll try again. And hopefully my PC will work, right? Hopefully I don't have to buy another one of these for tomorrow. But either way, thank you all so much for coming. I'm glad that I can help out. Cam says, that was amazing. Thanks, Chris. And hey, a new face on here. VJ Kumar. Very, very helpful. Well, VJ Kumar, thanks so much for coming, my friend. Thanks everybody for coming. See you right back here tomorrow. We'll talk soon.